morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 633 video, baby. Our 633rd video. These are technical analysis videos that we put together to help teach you to be a better analyst. Traders, this video is being filmed on Monday night for trading Tuesday. That's September 21st, 2010. I will say this right off the bat. FOMC or Fed Day is Tuesday. We're having, or the Fed, I should say, is having a one-day meeting this month. Generally, the Fed will meet and have a two-day meeting, right? We find out on Wednesday what they're going to do. This meeting is one day. It's Tuesday only. Results come out at 2 p.m. Eastern, 2:15 p.m. Eastern on Tuesday. Traders, futures trading is risky and can cause substantial financial loss. Futures trading is not suitable for every trading account. If you do not have risk capital, if you do not have money to lose, please don't play this game because it's very risky. But for you cowboys out there, bang, 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 I know how you guys trade. Listen up. We do not want you to trade the S&P on Tuesday. Let the Fed make their announcement. We know there is a 99.99999% chance the Fed can do nothing tomorrow. We're aware of that. No rate change is expected, but still you get massive volatility when the Fed comes out and makes their announcements, whether they raise rates, lower rates, or leave them unchanged at any meeting. So a meeting where they do nothing still gets crazy volatility afterwards, so be careful. Traders, I will say this. Oh, I know that. There we go. Ask Oscar. It is the comment question of the day. Ask Oscar. And I have my hermetically sealed envelope right here, and it is from Bernard Madoff from jail, I guess. Is this from Bernard Madoff? I hope it's not really. From Bernard Madoff, I have my envelope with the question of the day in it. What do you have for me to open up this envelope with, Mike? It's not going to hurt, is it?
It may. Bernie sent one of his girlfriends.
Oh, no! He sent an inmate for me to open up the letter with. How am I going to do it? Wait, what if I hit him over the head with it or something? Wait, stand there. Put out your hand or something. I have to try to get the letter open on Bernie Madoff's. What are you, his? Oh, no. Are you his, I'm afraid of him. Should I be afraid of you? He's trying to eat my bugs. All right, wait. Here's what we need to do. We need to somehow get this open. I have an idea. Use your teeth. There we go. No teeth, huh? I guess Bernie had those removed. Here, wait. Let's try this. Right, I think we have, I think I'm going to use his ear for the rest of this. Give me your ear. Come here. Hey, Bernie Madoff, you are one strange character. Normally they get him out of here. Normally they send me like a letter opener or sometimes a chair. I get sent a human. Hey, thanks for your help on that. So, I don't know who this Bernie Madoff character is, but he's obviously a member of our site. His name is Mr. Bernard Madoff. Bernard L. Madoff, for that matter. Okay, so Bernard says, Oscar, one day ago, we have, or at least he's referring to what he looked at a day ago, do we have a huge bear flag in the S&P on a monthly bar chart? Is there a connecting line from the March 2000 top until now? Is it valid? And it's BM from Copenhagen, Bernard Madoff, and thanks for sending your little honey to get this opened with. Well, here's what I have to say, Mr. Madoff. First of all, if it was you, and if it is you, I'm glad you're in jail for the rest of your life, but the likelihood is this is not quite Bernard Madoff. So what I have to say is this. Traders, I didn't plan on doing a chart segment in this video because I only have one trade set up for tomorrow, and that would be in the euro, and it's to trade very quickly. We either get in tonight and get out very quickly tomorrow morning, then we're sidelined. We're not going to trade any S&P at all, or we get in the euro, it plays around a little, but we will be out long before tomorrow afternoon. So I did not plan on doing a chart segment in this video, but being that Mr. Madoff wants to know if we have a bear flag on the monthly S&P, I have no choice. So with no further ado, traders, let me go prepare a chart. Let's go look at some charts. Okay, traders, for Bernie Madoff, the guy who forced me to do a chart segment in this video, here's what he is looking at. He's saying, Oscar, is there a big bear flag on the monthly bar for the S&P? And you know what? If you look at that, what else could you call it? Absolutely, unequivocally, that is a bear flag.
problem with a monthly chart is it can stay in this bear flag 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 more months before it ever comes out. You don't know what a monthly bear flag will do or when it will ever come out of the flag. So could it break right here? Yeah, and that would be a monthly flag that we can count on, especially that we are at the 200 ball moving average right now while we're testing the bottom of the bear flag. And it certainly has a projection much, much lower if in fact it turns out to be a bear flag. The problem with the monthly charts is unless you're trading year after year, you're holding positions for 8, 10, 12, 15 months at a time, you really can't use that to do your analysis. You can use the monthly chart to look at the forest, so to speak, so that you can separate the actual path of the market or whether it's a bear or bull market. You can do that by looking at one of these monthly charts, but you cannot pull a day trade off of a monthly chart. If you're going to trade a monthly chart, be prepared to hold positions at least for a month or longer. But to answer your question, yes, unequivocally, that is a bear flag on the monthly chart. If in fact it did break from here, projections would be much lower than the previous dip to 666. I am not calling for it. I am not using this for analysis. I'm answering a question of one of our readers. So, traders, you've seen that chart that, yes, is a bear flag. It's huge. I hope it never, ever breaks down because that would be an enormous projection. Traders, again, I didn't want to do a big chart segment here. We'll do one tomorrow night to see what's going to happen for Wednesday and the rest of the week. However, don't forget that the huge, huge head and shoulders above us is still looming. No matter, we could go up 20, 30, 40 more dollars in the S&P and still be inside that head and shoulders area. So let's take this one day at a time. Remember that it is FOMC or Fed meeting day. It's a Fed day. We do not trade the S&P on Fed day. We may play with the euro just a little bit in the early stages of tonight into tomorrow, but we will certainly be flat long before the Fed makes their decision. Traders, try to do the same. Keep your powder dry tomorrow. You do not have to be in this market every day, so you don't have to trade on a Fed day. But if you do, please remember that a stop is your best friend and never trade without stops, because that is the ruination of most traders. When you see a trader who was there one day and gone the next, it's usually the guy that did not place a stop when he placed his orders. Make sure you use stops. All right, traders, so it's going to be a light day for us. Again, stay close to the site because there could be a little euro pop between now and tomorrow before the Fed meeting comes out. So let's see what's going to happen with that. Do your own homework. Try to keep your powder dry. And above all, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Is that jailbird again talking?
That's weird stuff, man.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.